So we will be looking at a pattern called descending channels. Descending channels in this example is whereby price makes a series of lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So basically, there are two scenarios of trading this pair of trading this type of setup. One is whereby after a lower high is made, then a lower low is made, then a consecutive lower high is made, and you manage to connect the descending resistance. Then you can be able to take advantage of this next lower high when it will be formed, because you will be speculating that prices will push back to break the recent lower low, meaning that once this lower high was made, then a lower low was made here, then a lower high. Now we have 2 points of connecting the resistance, then a new lower low was made. So once price comes to retest this resistance, we'll be looking for signs of rejections at the resistance. That is things like pin bars. You can just see long wicks, or in the lower time frames, you can see reversal patterns such as double tops or head and shoulder. So that is one of the opportunities that you can take to trade a bearish setup for the descending channel. The other option is once the price comes to retest the resistance and breaks out above the resistance and closes with a candle above the resistance, you'll wait for price to push up, then retraces back to retest the resistance so that you can scale in to a long position. Now, how to identify a retest? You'll either use Fibonacci, or you can wait for prices to reach the resistance trend line and start acting as support by showing rejections to the bullish side. So therefore you can see either things like uh, engulfing bullish candle, stick, or pin bars, such things to consider uh, scaling into a long position. So those are the two scenarios where you trade the descending channel. So one is you either wait for the third bounce from the descending resistance, whereby you'll take your take profit in the recent lower low, and the stop loss should be above the previous lower high. Okay, so the other scenario is whereby the price breaks above the resistance, and once it retests, you'll be looking for scenarios of rejection whereby now the previous resistance is acting as support. So this type of setup, you can still see it. Assume we've been having a bullish rally, such as you've seen like this week. This week there's been a war between Israel and is it Palestine? So you've seen how gold has been shooting. Basically, anytime there's a crisis like war, the safe havens such as gold and JPY, the gain. Investors prefer to put their money in gold or JPY. Therefore, anytime there's a crisis, you will see gold and yen appreciate, and also Swiss francs. So in such a scenario whereby there's a very strong bullish rally, you can meet such a descending channel acting as a bullish flag. Okay, meaning price pushed high quickly, then it's kind of breathing while people are taking profit before it continues moving back up high. So in case of a breakout, there are two scenarios of measuring your take profit. First off, you do measure the distance of the between the low of the channel and the high of the channel. That same distance is the same distance that you expect the price to move after it has retested to the first target. Okay. Then the second one, assume there was a bullish run before this descending channel was formed. You measure from the root of the bullish run where it began to the top of this channel. It's the same distance as to from the bottom of this channel to where the price will reach. That should be the final take profit. Okay. Now you've understood that. Let's look at an example in the live market currently. So here we have Eurgbp. So basically, I had seen this pattern last week. You can see price bounces, forms a high, forms a low, then a lower high, then a lower low. Okay, then it comes. So the scenario I told you of executing a short position here was the first. You see when the here would have been the first opportunity for taking a short position. You see when price touched the descending resistance, it started rejecting. And so if you'd have taken a short position here, maybe going back to the lower time frames, you would have seen maybe something like a double top, yeah, or a triple top, any pattern. So our first sell position will have been executed around here with our target being at this previous low. Okay, because if it was to break if it was to come and form a lower low, we would have expected that the prices would have come to haunt stop losses here. So meaning that that will be our area of take profit. But then price came, it pushed down, but it didn't even break any recent even the minor lows that had been formed in the low time frames. Then price came, retested again. Then once you start seeing price retesting something, either a support or a resistance, it shows that there are signs of weakness and there's possibility that price will be breached to the opposite side. So in this scenario, you see it retested the second time, it rejected, and then it retested at that time here, then it broke. So after breaking on the upper side, basically for me, I always wait for first up. I don't. There are some people who just execute instantly, which is okay, because if you would have executed here, then your stop loss would have been around this minor low that was formed here. Okay, then your target would have been your first target would have been, where's my arrows? Can't find my arrows. So basically, the way I was saying is you measure the distance from here to here. Okay, it's the same distance that you expect price to move from after retest to the first target. You understand? So for the person who would have traded immediately after breakout, would have been expecting something like stop loss should have been below the recent low, then target should have been around. I always like to pick my profits at around round numbers. So yeah, I would have picked my profits at around 87,500, around there. So for the person who took the trade immediately would have a risk to reward ratio of 1:2. So for every $100 you risk in this trade, you expect to win $230. So that is for the breakout traders. For me, I always do like to see price push up, then slowly come to retest back. my areas of interest. So in this scenario, I would have expected that the price would come and retest this descending trend line. Once it retests it, and I see signs of rejections to the bullish side. Now, assuming like this bearish pin bar, now it will have been bullish one. I'll be expecting to see such reactions. But then going to the lower time frames, you see we have an ascending channel now, an ascending trend line. Sorry, price touches here, bounces up. Price comes, retests it, bounces back. So it's retesting this ascending trend line for that time. So this would also have been an area of interest to expect to scale in to a long position. Another thing as to why this area is of interest is if you go to lower time frames. Let's go to like H1. You can see that here there is a support. Here there is a support. Here there is a support that was slightly breached, and then price pushed down and broke the support, meaning that here there is for give me a minute. Meaning that here there are stop losses, here there are stop losses, here there are stop losses. So meaning here there's a lot of liquidity. Okay, so by pushing prices below this support here, it means that they have hunted a lot of stop losses. Basically, for any person who was taking long positions earlier and was placing their stop losses below here. Remember, when for a person who has a long position, when his or her stop loss is touched, it means that the market has automatically introduced a sell position. Okay, then so once the prices breach below the support, they have swept out the liquidity of the buyers here, the people who had put stop losses around this place. And then remember, there are some people who will wait for this support to be breached, then retested, for them to execute sell positions. Okay, so for those people who will execute sell positions here, price will push down again, then push back up, and obviously they have put their stop losses now in these regions, and so these regions will come, their liquidity will also have been swept. So here meaning that earlier buyers were removed from the market, then sellers who now assume that the prices will push down, they went into little profit, then prices pushed back to eliminate their stop losses. So meaning there's a lot of liquidity now in the market. Okay, and you can also see things like this trend line. Remember, all these are liquidity positions. So this was this was a very interesting area to scale into a long position. Then for those people who trade with ICT style, once the liquidity was swept around once the price pushed here to form a lower low, sweeping the liquidity, all these liquidities, so to form the lower low, lower high, lower low, lower high, then higher low. Okay, so it has failed to form a lower low. meaning that now bullish momentum is reappearing into the market. Then after higher low, higher high, because it has breached this lower high, now it has formed higher high. That is a change of character. So for those who trade ICT, obviously after this change of character here, now you'll have been looking for price to come, retrace back, and maybe around the recent bullish order block. That is the place you'll have executed your first position. So so basically, for people who use ICT, after this change of character here, you would have waited for price to push up, form new higher high, then now retrace back to order block of interest. So here's our order block. Let's highlight it. So for people who trade with the ICT strategy, I believe their first entry will have been around this place. Okay. And then obviously now their stop loss would have been, because there's already change of character, would have been below this low here. And then obviously now they take profit, assuming that the first take profit being this high here, which would have been around a ratio of 1:7. Then the other take profit that they were expecting at around 87,500. With a risk reward ratio of around 1:12. So currently, for the person who executed the trade here, currently they're in right now at around 1:2 already. So for every $100 they risked right now, they should have made $200 in the very least, which would have been even good for a take profit one. So here's a demo account that I had executed this trade. You can see that I executed it here after a change of character and then the retest. And so I'm already in that position, and I'm expecting that it will go to around the 8700-ish region. So that is the pair I wanted to discuss while showing you how to analyze the markets by, first off, while looking for good trade, you always have to look for a lot of confluences. Okay, maybe a trend line is coinciding with a Fibonacci level. Maybe a trend line is coinciding with a previous order block, something like that. Maybe you are trading a head and shoulder, and as the price comes to retest, it is retesting a place of confluence with a descending trend line. Okay, that is a more likely trade to go to your favor than a trade that you only just look at one thing. Examples are, look at reversal patterns like W and M patterns. If there is a confluence of price movement and volume indicators such as RSI, if there is a divergence, it means that if there is a divergence of price and momentum indicators, it means that this trade is more probable to be a reversal than a trade where there is no divergence of present momentum. Okay, if it's a confluence whereby a lower low is being formed while also momentum indicators forming lower lows, it means that the price will continue going to the lower side. Okay, so that you won't trade as a reversal pattern. So for such a trade, you've seen confluences of a breakover descending channel where we saw it in hour 4, a break of descending channel. Okay, we saw a break on the upper side. We saw press push up. We saw it come form a kind of support, then breach it to the lower side to earn stop losses. We saw it bounce back from an ascending trend line. Then on the lower time frame, we saw change of character and we saw retest of order block. So here there are at least 3 confluences supporting our decision to take a long position. Okay. Finally, remember that trading is speculating. Whatever prices do today, they might not repeat themselves tomorrow. So always remember to calculate your risk in every trade. Yeah, cheers. So basically, you'll be expecting to take my profit around. My first profit will be around 8700-ish region. My second profit will be at around 87500-ish region. So hopefully it will go to our side. Otherwise, manage your risk. Yeah, cheers.